thanks for joining us today on Market Call. I'm Morella Fernandez. Ivana Delevska with us on the show today. She's founder and CIO of SPEAR Invest. We'll take your questions on technology stocks. Here is how to reach us. 1-855-326-6266. If you're dialing in, of course, you can always email your questions as well. That is Market Call at BNNBloomberg.ca. Ivana, good to see you.
Thanks for having me, Marilla.
So the AI landscape, we know, changes very quickly. The winners of today are not necessarily the winners from yesterday. If you were to invest in one part of the chain, just one at this point, where would you put new money?
So right now, Marilla, we are seeing a lot of investments going on the capital equipment side. So this would be the most attractive area of AI for us in the data center value chain. Basically, what's been happening is that as you're needing more memory, as you're needing more chips, that comes with increasing CapEx requirements. So it shifted from being tracking the CapEx of the hyperscaler who are investing in the chips to the chip companies who are investing in incremental capacity.
Okay, I know that memory has been a big sector to watch. A lot of people are sort of lighting that up. Do you expect that to be a continuous demand for the rest of the year? Are these stocks people should look at for the, let's say, as a whole for at least a year or two?
Absolutely. So we like memory. We like other components as well. This is a very attractive area of the data center value chain. However, I would say that as we get further into the cycle, we're going to start talking more about capacity additions on the memory side. And at some point, once supply seems like it's going to be exceeding demand, you're going to see these stocks flatten out. So we don't see it just yet, but this is why we think the better risk reward is to invest on the capital equipment side. These would be the companies that provide the machinery to build more memory capacity.
Okay.
So that cycle will last longer than the memory cycle itself. That's usually how it works out during these cycles.
And one of the things that you are looking at, which always sounds so out of this world to me, is this idea of data centers in space. How realistic is that idea, and what have you noticed, or what are you watching?
So, Marilla, we've been tracking the space sector for a long time now. There are few use cases for space, like broadband connectivity, like defense, that have been around for several years now. These markets are pretty small, though, compared to the data center trade, right? So from historical perspective, the space space looked a little bit too risky to get involved in. Now we're talking about data centers in space. And what's interesting is that the technology is not very different in what satellites are doing today. So satellites are using solar power energy today, and they have compute on board. It's not Blackwell systems on board, right? But they are able to have some sort of compute on board. So we think that the idea is much closer to reality than people think. Launch costs need to decline significantly for it to be economical to do this. But it's from a technology perspective, I don't think we're very far.
Okay, so who is looking at putting the data centers in space, not getting it up there, but building them?
So the main competitor will be SpaceX. They're the leader in space. They're leaders in launch as well as operating satellites. And they also have, Elon Musk has a lot of know-how in AI and chips. So they're clearly going to dominate the space. But I wouldn't underestimate the other players. So Google is looking to launch data centers in space in 27, or better said, compute in space for now until we have bigger systems built out. So they're looking at doing something in 2027, and they're an investor in a company called AST Space Mobile, which does operate very large, some of the largest satellites from energy consumption standpoint. So we think we're going to see a lot more activity here. It's not necessarily that in 2-year time frame, all the data centers will move from Earth to space. That's not the thesis here. It's more that there is going to be a lot of activity, and with limited supply and limited launch capacity, you're going to see a lot of potential for returns here.
Okay, let's leave it there, where we will round up our first phone calls and emails for Ivana Delevska, SPEAR Invest. Again, she's taking your questions on technology stocks. Here's how to reach us. Back in a moment. Welcome back. Ivana Delevska with us today. She is taking your questions on tech stocks. We're going to start with an email here from Charlotte. She says, wondering if I can get your take on Apple, one of the big Mag 7. Apple for a long time was getting hit, Ivana, as you know, about not having an AI plan. So what do you see for Apple?
So we still haven't seen an AI plan, interestingly, from the company. So we're still on the lookout and trying to find out if they're going to launch something that will be competitive and interesting for consumers. We're still pretty negative on the stocks just because we haven't seen anything come out of them yet. I would say also, as we go further into the cycle and the data center trade drives prices for things like memory, component cost for Apple will start to increase significantly. So I think this is something that people may not appreciate, that the memory all comes from the same factory, right? So if prices are going up 50% on the memory for data centers, that's going to trickle down to Apple as well. They have pretty high gross margins, so it's not like they're going to not be profitable. But we do see that as a potential risk, because on the reverse, we don't see anything surprising to the upside. Now, expectations are very low for the stock, so especially on things like earnings, it could surprise to the upside based on how well the current generation of phones is selling. But I think to get excited about it long term, we would want to see some progress on their positioning in AI.
Okay. That was for Charlotte. Let's go to our first caller then. Daniel's on the line. He's in Markham, Ontario. Hi, Daniel.
Hi, Marilla. Hi, Ivana. Great host and great new guest.
Thank you.
My question is on Taiwan Semiconductor. Would you buy it at this price today? And if not, at what price do you suggest is a better buying opportunity? Thanks for taking my call.
Okay, thank you. Good question about when to buy some of these stocks that have valuations that are pretty high. What do you think of Taiwan Semiconductor, and would you get in where it's at today?
So thanks for the question, Daniel. We think Taiwan Semi is very attractively positioned in the value chain, because they are on the foundry side producing the chips for many of these chip designers. So they will benefit no matter who gains traction. We think the stock is a little bit ahead of itself here in terms of valuation. So we're not currently invested. We see better value in other stocks across the value chain. We disclose all of our holdings on our website, but that is really the reason why we're holding off on buying. I would say that we expect the stock to continue to compound going forward. We still see upside to earnings, but it's not big enough upside for us to be interested.
Okay. Let's move on then to David. David's in Hamilton, Ontario. He's got a question. Hi, David.
Hi, Marilla. Hi, Ivana. Ivana, I was hoping that perhaps you can provide me with your thoughts on Rigetti Computing.
So Rigetti Computing is one of the leaders in quantum computing. Did you have a follow-up, Daniel?
No, I think we've lost him already. Go ahead.
Okay, no problem. So yes, Rigetti Computing is one of the few public quantum computing companies, and they are really well positioned in the space because they have an open platform that many other companies can use and build on top of. I would say that the quantum computing trade surprised a little bit to the downside last year in the pace of commercial contracts that we were getting. So this used to be a very big sector for us last year, but as we weren't really seeing the commercial contracts come through, we trimmed our position. We are looking for a better entry point, more not so much from where the stock is, but more to see the point in time where some of these commercial contracts get built up and awarded. So we're really looking more for momentum on the earnings side. But I think the quantum computing space looks pretty attractive. This is much riskier than some of the other stocks that we mentioned, like Taiwan Semi. I think that's a pretty safe bet in terms of compounding over time. I think with Rigetti, you have a lot more upside, but also potentially a lot of downside.
Okay. I just looked up the analyst price target, and it's coming in at 40.30, and it's at 21.95 or about 22 today, just in case David wants to put that in his back pocket. Let's go to another email from Paige. Paige says, I would love to have your guest thoughts on getting into Amazon. What do you think of Amazon and its way forward? I know they are laying off, and that was the news sort of announced today, tens of thousands of jobs. Or we know that they're moving more towards robotics in the warehouse, and that'll replace people as well. But forward-looking, what do you think of Amazon?
So for Amazon, the key will be how well they execute on this new chip that they're introducing. It's called Trainium, and the next generation is getting deployed this year. And this is the first real large-scale generation that they're deploying. So we're going to look for how that goes for them. I think the stock hasn't done so well over the past year, so it looks like a pretty good entry point if they can execute. Again, it's not a holding in our portfolio because we are looking for some of the smaller caps plays that I think are going to have a little more upside in the next 2 to 3 years. But Amazon does look well positioned here, especially if they can execute on the hardware side.
Okay, let's take a quick break, Ivana. We will be back to take more questions, emails, and phone calls in just a moment. Stay tuned. Welcome back. Let's go back to the phone lines. Craig's on the line. He's in Kelowna, BC. Hi, Craig.
Hi, thanks for taking my call. My question's about Micron. I do own Taiwan Semiconductor. I've looked at Micron in the past. I just wonder if I'm too late for the party on this one. But secondly, I'm trying to understand what does Micron do differently than Taiwan Semiconductor? I'm just looking for your general thoughts on if you see it as a good longer-term hold, 3 to 5 year type thing.
Okay, thank you for the question. A lot of investors want to know, am I too late to the party? It's a good question there. What do you think of that question when you look at Micron?
Well, that is a great question. And I'll first start with the comparison of Micron and Taiwan Semi. They're very different companies playing in very different cyclicality levels, right? So Taiwan Semi is a leader in the foundry space. They're basically the only company. Now Intel is coming in and trying to make a comeback, but they're by far the highest market share. So from that perspective, it's a lot safer play. Micron is one of 3 leading players in memory, and memory is a very cyclical market. Right now, we are seeing it closer to the bottom than the top of the market, I think. So I think there is still further upside. However, I would caution with these highly cyclical stocks, they stop working way ahead of the cycle peaking. So we're really looking for capacity expansions and trying to understand, well, when will the market come in balance? Because clearly right now it's in Micron's favor. So I would say that there is still more room to run from here because the stock is not expensive. But it is a little risky because this cycle will end at some point. So you really need to be watching it closely.
And just out of curiosity, are there any tip-offs to knowing that the cycle is going to end?
Yeah, absolutely. So what we're closely monitoring and modeling is all the capacity announcements that are coming from Micron, SK Hynix, that's the Korean competitor, and Samsung. So those are the 3 names. And basically, they're going to be investing significantly in capital equipment. This is why we like the capital equipment names, because there is really no way for them to lose from here, given how much capacity needs to come in. So what we do is we monitor all of these plans that are coming online. And once we kind of come closer to a 1 to 2 year to deployment, that's usually when you see the market start stabilizing.
Okay, good to know. Let's go to our next caller then. John is in Brantford, Ontario. Hi, John.
Hi, thanks for taking my call. I've owned Core Scientific. I've doubled my money. Should I hold on to it? Because I think CoreWeave is supposed to be buying them. Could you comment on that? Thanks.
Okay. Ivana, can you tell us a little bit about Core Scientific, what they do?
Yeah, absolutely. So this is a very interesting area for us that we've been very focused on over the past 6 months to a year. Core Scientific was historically a Bitcoin miner, along with several other names. So over time, they've really built expertise in how to build very similar compute to what data centers need. So really, they turned out to be better businesses than the data center REITs in a way, because they are much more competent in the area of AI compute rather than what a traditional data center operator would be. So I think these names are quite misunderstood by the market and are very volatile. As a result, they're still viewed as very risky businesses from their heritage as Bitcoin miners. But going forward, what they're doing is they're securing long-term contracts with the hyperscalers or CoreWeave, right? They're securing the power capacity, and they're securing the land value. So from a business model standpoint, they're actually pretty solid business models. We don't own Core Scientific, we own Applied Digital, which is a very similar business, and TeraWulf, but I would lump them all in the same category. And for them, it's going to really depend on how well they can execute, if there's any hiccups in when they build capacity. I don't think it's necessarily a deal breaker if CoreWeave acquires them or not. I think they would do well as a standalone company as well. It's really more finding the ones that you like the management team and you think that they can not only build on what they've promised so far, but they can continue finding new data center sites and executing more contracts.
Okay. Let's go to an email then now from George. George says, please ask your guest if Intel is a buy, sell, or hold. Intel disappointed in its results, saying it's lacking inventory at this point, and they don't know how quickly they're going to be able to change that. What is your take on Intel? I know the stock is down.
So Intel is a tricky one because I think it's a buy, but the stock is always a little ahead of the fundamentals just because it's driven by a lot of news around the U.S. government supporting it. So I think there is still ways to go in turning this company around. You heard on the conference call that they're still trying to optimize their manufacturing capacity. So while everybody is expanding capacity and capturing market share, they can't even get yields from what they currently have. So from that perspective, I think there is still a lot of wood to chop for the company, and the stock is already reflecting significant improvement. On the flip side, they are well positioned and there are not that many players. So given that they have the US government backing and NVIDIA as a partner, I think it's pretty safe to assume that they're going to be able to turn this thing around. So for us, it's always how much upside do we see there versus upside in some of the other names. And it always kind of comes a little short, but I would not be opposed to buying it here.
Okay.
Especially on the pullback.
Got it. All right. Let's go to Len in Toronto. He's got a question. Hi, Len. Len, are you there? Okay, I think Len's question was about Poet Technology. They're chip manufacturers, I think, as well, semiconductor chips. Do you know them well?
I don't know them very well. They're a player on the optics side, which is something we're very focused on. We usually will go for slightly higher market cap. So our top picks in optics are Coherent and Sienna, but Poet is also pretty well positioned. They just had a secondary offering, so the stock price is pretty hard hit based on that. But they're well positioned in their market, so I would be a buy here.
Okay, Poet's out of Toronto, 964 million market cap, and you were saying you go for things a little bit bigger. Let's take a quick break. We don't have past picks from Ivana. Obviously, she's a first-time guest on Market Call, but we will talk about software and concerns there. Back in a moment. Software stocks have been hard hit over AI concerns, but investors perhaps aren't understanding the difference, Ivana, between what kind of software will stick around and will be needed and the kind of software that perhaps won't be needed in the future. So can you explain the difference? Let's start with the software AI can't replicate.
So interestingly, Marella, software has been treated as a whole sector. And basically what falls in that sector is companies with a SaaS business model, which means software as a service. So they're basically charging long-term contracts. And all of these companies traded at very high multiple due to the fact that their business models are relatively resilient. So what's happened over the past 3 years, as more AI tools have been getting introduced, people are starting to realize, hey, a lot of these business models can be replicated with very little effort using AI today. So that's why the sector has come in under attack. The area that we think that investors should avoid, or at least do their diligence more thoroughly on before underwriting ideas, are software applications. So this would be things like Salesforce, like HubSpot, where they're providing an application for people to use as a basis for their CRM system. Well, now what's happening with these AI tools, something like that can be replicated. Basically, the system can be replicated in several weeks. What you can't replicate is the installed base. But really, the risk is if the solution can be equally good, there is real risk for these companies that they're going to face competitive threats.
Okay.
Now, on the flip side, with software, you have companies that are actually providing the infrastructure for new entrants to build new tools and applications. So this is the part of software that we do like. And these tools include cybersecurity, which we find pretty interesting right now. So I think there is real bifurcation going on between applications and software infrastructure. And I think sticking with the infrastructure is a better way to go.
Okay. Can I address Constellation Software, of course, because the stock has really, really dragged down. I think it's about half of what it used to be. And they take software companies and integrate and then oversee. Because they do that, is some of their business at risk for the same reasons you explained?
Absolutely. I think that is basically why the stock is underperforming. This is exactly where we see AI disrupting businesses, right? If you're used to using something and you're paying a lot of money for an enterprise subscription, and all of a sudden you can replace it with a new AI tool and a small team of engineers, I think that's what people are concerned about.
Okay. I do want to get to one last topic, which I think is really interesting, and I think viewers will want to know about, is how to spot the trend before it becomes mainstream, right? We hear news in tech, and then we chase after that. But you have some advice on how to spot that trend before it gets out there and get in ahead.
Yeah, absolutely, Marla. That's basically all of what we do. So we were able to spot the chip sector before in 2023, because before people were even talking about AI, we're finding these opportunities across the value chain, like in networking and optics before they became popular. Quantum computing was another one that we really were early on. And even though the stocks have pulled back, we've made pretty good returns on. And here is how you do it. Basically, we cover a very broad range of companies, and we talk to them on a constant basis and try to figure out who are their suppliers and where they're investing next. So for every company in the value chain, we know basically where their CapEx dollars are going, and where the money is going, that's usually where the opportunity are. So that's how we're finding these semiconductor semi-cap equipment names here, because we can see that the likes of Micron, the likes of TSMC are really going to be increasing their CapEx dollars. So it's very easy for us to see where the puck is going from that perspective, because we do boots on the ground research.
Got it. All right. Ivana Delevska, SPEAR Invest, is taking your questions today on technology stocks. We'll get back to your phone calls and your emails in just a moment. Welcome back. Ivana is our guest today. We're going to go to an email from Craig. He says, hi, Ivana, wondering if you consider Nebius a buy, and would you prefer this over CoreWeave at this time? Nebius, I know we don't have a chart for it. It's at 97.26, and they have a cloud platform. Do you like it, Ivana?
So we don't know Nebius. Again, we prefer the Bitcoin miners because they have a little less risky business model. But both Nebius and CoreWeave look pretty attractive here because H100 and H200, those are the old generation NVIDIA chips. Those prices are still going up now. So a lot of people assume that as we introduce the new generations of chips, prices of the old generation chips will go down and these companies are going to be worthless. That turns out not to be the case. So I think both Nebius and CoreWeave look pretty attractive. Over the cycle, they don't have their demand locked in. So they're investing a lot of CapEx And the demand, while we're seeing a lot of it today, it's a little bit uncertain of how it's going to be in the future. So it's a little bit more risky than the Bitcoin miners because they're not locking in long-term contracts. On the flip side, that also implies that there is a little bit more upside in the short term on both CoreWeave and Nebius. CoreWeave has the support of NVIDIA, so that's something that is maybe a little bit better in terms of risk reward, but they both are pretty similar in terms of their exposures.
Okay, let's go to the phone lines then. Paul is on the line. He's in Brampton, Ontario. Hi, Paul.
Hi, ma'am. I just like to know about Tesla. Like it is going up to 480 and coming back to 420, 430. How do we see it going beyond 500 soon?
Okay, thank you for the question, Paul. What do you see for Tesla? Tesla, by the way, is going to report earnings today after the end of the trading day. Is Tesla a stock you invest in?
We have invested in Tesla in the past. We are not invested in it right now just because we are seeing a lot of potential for upside, but also potential for downside. And the reason is because some of these things like robotics and autonomous vehicles, they're either still very early in the case of robotics, or autonomous vehicles is going to take a much longer time to gain broad adoption. So we see the upside as pretty decent, but also there is really very limited support on the downside. So we look for companies that have good risk reward, some sort of valuation support that can get us through periods of downturn. And that's really what we don't have here. If you're an investor that can look out 10 years plus and don't necessarily care about compounding so much, I think it's something that you can own, but we really are more focused on compounding returns. So having 1 or 2 years of no returns, it's really not, doesn't really make the cut for us. So that's really why we're not invested. But long term, I think it's likely to do well.
Okay, thank you for that question. Let's go to John in London, Ontario. Hi, John.
Hi, Marilla. Hello, Ivana. Ivana, you mentioned in a timely way data center memory storage companies. That includes SanDisk, which is where my question is. It also includes Western Digital, which is also reporting this week, and Micron and Seagate, two other companies that occupy 4 of the top 5 positions in the S&P 500 over the past 4 months. What do you think of SanDisk for an add, or should I add to something like Western Digital? Thanks very much.
Thank you for the question. Go ahead, Ivana.
So yeah, I would say SanDisk is in a very similar camp to Micron. I think there is still a lot of upside just because there is still a lot of upside to the numbers in the short term. But you do want to be mindful of the fact that these companies are very cyclical. So I think I would look at personally at the semi-cap equipment stocks as a way to add upside without taking too much more risk rather than adding more to memory. So that's what I would say about the space overall.
Okay, let's go to our next caller then. Bill's in Bowmanville, Ontario. Hi, Bill.
Hi. Thank you for taking my call. I'd like your guest thoughts on Vertex, VIP, what she sees in the future for it. Thank you.
Thank you for the question. Vertiv, let's say, I don't think we have a line chart for Vertiv Holdings, but Ivana, can you just tell us what they do?
Yeah, absolutely. So Vertiv is a play on the data center infrastructure side. Their main product right now is liquid cooling. A lot of these data centers are generating too much heat and they need to be cooled. So they're very well positioned with their range of products in that space. On the flip side, they also have a broader range of products as well that play on broader data center. So even if cooling doesn't perform as well as people expect, a lot of people were very disappointed with the space trade, and they were like, "Oh no, now are we really not going to need liquid cooling anymore?" They do have a broad portfolio, so I think they're going to do pretty well. The stock is not cheap; it's already pricing in a lot of upside, so we are not involved in it because of valuation. But it is very well positioned in the value chain.
Okay, that was for Vertiv Holdings. Let's take a quick break. Lining up more phone calls for Ivana Delevska of SPEAR Invest. We're back in just a moment. Welcome back to Market Call. Let's go to an email from Sunny. His question for Ivana is, what does today's guest think about Shopify going into the earnings in a couple of weeks? And do you think AI will hurt or help? Is it clear how Shopify is using AI, Ivana?
Well, that's a great question, Marilla. Shopify is a holding for us, and we think that it's gotten sold off as part of this broader software sell-off. So we are using the sell-off opportunities to find ways to benefit from and find some of these stocks. I think they're a beneficiary from AI because they're going to be able to use AI and embed it into their products to make the shopping experience more effective. So I think they're already using quite a bit of AI. They have a slew of new products that they're launching. The CEO is kind of on the forefront on innovation. He's a very technology oriented guy. So I think they're going to be able to capture this wave of technology improvements and embed them in the product. So we like it a lot here.
Okay, that again was for Sunny. Let's go to our next caller. Ben is in Kingston, Ontario. Hi, Ben.
Hi, awesome ladies. Thank you very much for taking my call. Ivana, you briefly touched on the semis, and my question is, of course, on AMD. Do you actually, are you invested in it, or do you have any valuation concerns at this level? And what about the competition with the cousin NVIDIA? Thank you.
Thank you for the question. Are you in, or you hold any AMD at this point?
We are invested in AMD, and we really like it here. We're not concerned about competition from NVIDIA because the market is pretty large, and each company is carving out their own space. So AMD works particularly well in partnership with other companies. So this is why you're seeing some of the big names like OpenAI team up with them, because basically to use the NVIDIA chip, unlike AMD, can be much more broad and general purpose. The AMD chips, you need to build your own software infrastructure on top of them. But there are plenty of companies that can do that, and the chips are actually very cost effective. I would add as well that the CPU chips, so far we've been talking about the GPUs, the CPU chips are also turning around. And with Intel not being able to execute as well in this past quarter, that gives AMD a bit of an advantage. So we do like it here.
Okay, let's move on then to the next caller. Eric is in Kelowna, BC. Hi, Eric.
Hello. Thank you for taking my call. I was wondering, I was looking at Monday.com, and it's dropped off quite a bit recently. What do you think of it as a potential buy, or should a person sell and get out before it drops off even more?
Okay, thank you for the question. They do software. Where does this fall as far as AI concerns go?
So, Marilla, this will fall into that same category of software applications, which is what we are avoiding. The scare here is that tools like Anthropic's Claude that just got introduced yesterday, or some of these other agentic AI tools that are coming to market are going to replace the products that companies like Monday.com offer. It's not clear if they're going to be able to do it eventually, but that is the concern, and that's putting the pressure on the stock. So we are avoiding that space until we find any sort of catalyst or a way that these companies are showing that AI is benefiting them in the numbers. But for now, basically anything related to software applications, we are steering away from.
Would you sell at this point? Do you think there's a possibility of a bit of a return for the stock? Should he hold on for a bit of a bump and then sell? What do you think?
I mean, that's always a tricky question because you don't want to be taking losses. But the way we run our portfolio, we do rotate our positions quite often. Basically, anytime there is change or uncertainty, we increase our idea velocity. So we do actually exit positions, or at least exit partially and redeploy it into something else. That way your ideas always stay fresh, basically. And we've also found with analysis that the newer the ideas, the better they perform. So you don't want to be holding on to too many stale ideas. That would be my advice.
Okay. Let's move on then to an email now from Kay. Can you advise on Palantir and why it is struggling so much when most other AI companies are doing well? Should I sell or hold on until earnings are released next Monday? A lot of people get a little bit antsy around earnings for their companies. What do you think about Palantir?
So Palantir is the only pushback about that stock is that it's very expensive. So if you look at it compared to any other software stock, it doesn't even come close in terms of valuation. So there is no real good valuation support, and that's why we don't own it. I wouldn't say you want to sell here either, because there's nothing really wrong with the story. So if you liked it a month ago, nothing has really changed to the negative to prompt you to sell. And they're pretty well positioned on the defense side. So that's been doing very well. Defense budgets are going up. So I think from fundamental perspective, the fundamentals are in favor of Palantir. The valuation is a little bit tricky. So I would hold it. We don't own it in our fund, but I wouldn't necessarily sell it. Also, I would say these high volatility stocks, really, you don't want to be getting nervous about, right? So if you've decided you want to be investing in them, you do need to have some room for pretty significant pullback. Like any of these stocks that we've been discussing can be down 15, 20% on earnings. And if you're not able to take that type of volatility, I would say you can look for some either more diversified solutions or like some stocks that have like a little bit less volatility. But in general, stocks like Palantir do have a pretty high beta.
Yeah, I think that I'm glad you mentioned that, because not everybody has a stomach for that volatility. Okay, let's get to another email from Frank. He says, could your guest provide or comment on purchasing ASML at today's price? So this is another semiconductor. We'll pull up the line chart in just a moment, take a look at it. And what do you think of ASML?
So Marilla, we really like ASML here. They're a play on that semi-cap equipment that I mentioned before. They're actually the leader in what they do, and they have over 80% market share. So the cycle is just turning for these companies. They just reported earnings today, and the bookings were just blowout. They were like 60+% better than what the street expected. The stock is not seeing a super positive reaction today just because some of this was expected. So usually what we see during earnings releases is there is usually some sort of profit taking in some names that have done well year to date, but there is nothing wrong with the fundamentals. And I think this is one sector that is at an inflection point. So I think that move up in price year to date is justified, and I think there's more room to go.
Okay, that is good to know. Let's get to another email from Stu. He says, if Ivana were to initiate a new position today for a longer-term hold, would she choose Microsoft or Alphabet? Again, going with the big tech companies. Where would you put your money, Ivana?
I think out of the mega caps, Google is probably the best positioned. And the reason is because they're really well positioned on the hardware side with the TPUs. They really have a strong moat with their ad side, right? So both in search and with YouTube. So I think between the fact that they have the hardware and the software side, they're really well positioned. They also have a pretty strong positioning in quantum computing as well. That's not something that's going to move the needle in the near term. But if you want an exposure to that space in a less risky way, Google is one way to play it. So I think they're pretty well set here. The stock is reflecting some of that upside. It was a very solid performer last year. We usually find a little more opportunity to generate alpha on smaller caps. So our sweet spot is $1 billion to $100 billion in market cap. This is where we can do boots on the ground research and come up with something differentiated. So that's why we generally are not invested in the mega caps. But if we were to invest, I think Google would screen pretty well.
Okay. Also good to know where your parameters are. We're going to take another break. Ivana will share her top picks when we come back. Join us tomorrow for Market Call. Richard Orwell will be on the show, portfolio manager at RN Croft Financial Group. He'll take your questions on exchange-traded funds, ETFs. And if you missed Market Call, check out our daily podcasts. Find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. Time now for some top picks from Ivana, and we're going to start with Coherent, KOHR, on the New York Stock Exchange. You mentioned optical network, and that's something you're watching. Tell me more about how this works and why you like Coherent in the space.
So, Marilla, Coherent provides networking components specifically focused on optics. This is basically how all data is getting transmitted outside of the data centers and also within chips. We are seeing an inflection point that started midway of last year for the optical stocks. So we went through a down cycle based on the telecom market being a little weaker, but now they're starting to gain very broad adoption in data centers, and this is basically why we're excited about it. Other names in the space would be Lumentum and Ciena, but we like Coherent much more on valuation basis.
Because the others are overvalued?
They don't screen as attractively. We own Ciena as well. We don't own Lumentum because it's a little bit ahead of itself.
Got it. Okay. Let's get to your next pick then, which is Lam Research on the NASDAQ. And Lam is in the big space you like right now, which is part of the build-out. Tell me about Lam.
That's right, Marilla. So Lam is a leader in semi-cap equipment. These companies will benefit from memory build-out, from logic build-out. Those are the two big areas that we expect to see near-term upside in. ASML reported, as we mentioned, very strong results. Those are really good read across for Lam Research as well. So they're really at an inflection point here because they really faced some headwinds over the past 2 years, and revenues is really starting to inflect upwards this year. So we see significant upside to earnings estimate compared to what the street has today.
Who would be their competitors?
So they're really like these types of names are very niche players in different categories. So while there is a broad space of companies like ASML, they will do a completely different type of product. So it's not very competitive, which is why they're able to gain, to get really good prices. Names that are similar in that space would be MKS Instruments, but they don't do exactly the same things.
Okay, and I'm wondering, when we talk about build-out and investors' concerns over some of these companies spending too much money and not seeing necessarily the return on that, do you have any concerns about debt with Lam?
Well, I just want to make sure that we differentiate between the two. So when people are concerned about the build-out, they're really more concerned about the hyperscalers building out too much data centers. So that's really where the concern is. On the CapEx side, these companies like Lam Research and ASML, they actually play on the build-out of new chip capacity and new memory capacity. And that's really not been an area that's been invested in for the past 2 years. So we've gone actually through a down cycle in CapEx investment in the chip manufacturing area, right? So it's a very different type of build-out. We don't see anybody even talking about any concerns in that area because we're just emerging from the downturn.
All right, good to know. Okay, let's get to your third pick then. Rocket Lab, RKLB on the NASDAQ. They are small rockets, I guess, but you said they're moving to larger ones?
That's right. So Rocket Lab is one of our top picks because we think that launch capacity is going to become very constrained in the next 2 to 3 years, especially if this data center trade gains traction. Even without data centers, just launching these broadband connectivity satellites are really going to take up a lot of the projected capacity. And the really exciting thing for Rocket Lab is that they're launching this new rocket called Neutron that is going to be much more competitive on price. The key with space is how low can cost per kilogram go down. So we're looking for cost per kilogram to go down from around 3,000 to 300. And this would really enable things like data centers and a broader build out to happen.
3,000 to 300. And sorry, what was the timeline for that, or what do you expect?
Well, according to SpaceX, it's happening now. So the Starship rocket that they're testing and launching right now, the costs are closer to 300. So we are already in the right direction there. And it's really all about how much of the rocket you can reuse. And how large can the rocket be? So those are the two kind of variables that go into it. And Starship is a significantly larger rocket, and they're hoping that they can reuse a big part of it. So I think that's basically why the excitement around space is coming, and especially with like a use case like data centers, if that can materialize, the upside would be pretty significant.
Yeah, so hard for us to, or for me, many, to visualize that happening, but we already have the ISS, I guess. So it's probably closer than we think. Ivana, great to have you. Thanks very much for joining us today. And thank you for joining us today. We'll show you a quick look at the markets ahead of taking that break and see where we stand for the TSX and the other North American markets. The S&P 500, not a material change today. The Dow Jones, 27 points up. And the NASDAQ, not a lot of movement there. It's 22 points up on the day. We will take a quick break. Thanks for joining us on Market Call. We'll see you back here tomorrow.